Welcome to Trends with Benefits, an award-winning podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, work, and life. Here's your host, Ed Lopez.
I'm going to start out a little weird here, Doug. Do you have a favorite artist, music artist, band?
Music artist. I've always loved Motley Crue. I'm a huge 80s fan. And when I think about artists, a lot of my music listening right now is at the gym. So either I'm listening to like kids songs with my kids or gym music. So I'll go with Motley Crue and not one of the kids bands that I feel like I listen to all the time.
Well, that's interesting because as I was thinking about this question, there is actually an AI tie to this, but I actually thought about Motley Crue as a band that I might answer for. But so the follow-up question because of that is, which version of Motley Crue, like the early days or the more processed days?
I'm an early days guy. Yeah, you have Vince Neil on the mic and Tommy on the drums. You know, the Dr. Feelgood album was a legend.
Yeah. So then the real question is, what if AI could generate endless Motley Crue songs or songs in the style of Motley Crue? Is that something you would listen to?
I think it probably would be. Like when we have talked about AI and what the future will look like, one of the things that I used to really believe very strongly was that creativity was sort of this human domain that would be really hard for AI to replicate. But my opinion is actually changing a little bit on that now with what we're seeing with OpenAI and Sora, the videos that they're creating. I think that we'll see music generated by AI that we will probably love to listen to because I think AI will understand how to create things that please us.
Yeah.
It won't understand how to create like that emotional thing that an artist does and have that meaning. But I don't know if that matters. You know, it's still functional content. And I think there is a place for human artists in the world even beyond AI. But I think AI content is probably going to be bigger than I thought it was a year or two ago.
Yeah, there's some experiences that are just innately human, the way you interpret it or feel it and express it. But maybe it has to do, for me, I think right now, maybe it's the type of music. If it was going to be a soulful folk song, maybe. But if it's going to be EDM, oh yeah, I'll take all the AI you can give me. It was interesting. I was just kind of fooling around doing some research, saw a news report from CBS about Udio, the music generator is one of those. And it was kind of cool. I wanted to play around with that.
I think the video stuff's going to be really cool too. I mean, I've seen some of the content that comes, I mean, obviously the Sora stuff, but also even Runway. I mean, the creativity, and that's still, I mean, humans are still driving that, right? They're using AI as a tool and sort of reducing like the cost if you were going to spend $100 million and do a really cool animated video. And now like one person who has the technology to basically do that themselves, they need to learn how to do it. I think we're going to see, you know, the next DreamWorks will probably be a couple people that are maybe working remotely.
Yeah, it's fascinating. As you said, brave new world. Happy to explore it more on this podcast with you. I'm speaking with Doug Clinton, managing partner at Deepwater Asset Management. And as you may have gathered, we're going to talk about AI. In particular, I'm going to focus on AI in investing. But I think Doug has got a purview into the AI world, probably has an opinion about a lot of things AI. So I can't wait to pick his brain. And Doug, welcome to the podcast.
Thank you, Ed. Good to be with you.
If we continue down this theme, it sounds like AI could be prevalent in all facets of society in the future. Finance, obviously, music, art, video, things of that sort, just processes. Does that innately make it an investment opportunity?
I think it does. I mean, what I have been saying about AI is we are in the early stages right now, inning 3 or 4 probably, of the AI bull market. If you study history, if you study the history of technology, what tends to happen with these paradigm shifting technologies is they do culminate in bubbles, for better or worse, good word, bad word. Some people hear bubble, they get excited. Some people hear bubble and they say, I can't wait until this blows up because I don't want to hear about it anymore. But the reality with AI is, I think it's real. I think that we are going to continue to see growing investment in the space. And what's great for consumers is whether we get a bubble, we don't get a bubble, whatever happens on the investment side, the products that we are going to have to use as consumers are going to be incredible over the next 3 to 5 years. I think it's really going to change how we do work, live, and play.
Yeah. Yeah. I think I got to agree with that. Though part of the question, when I think about that, we do a trend or fad round at the end of the podcast, and I've asked about AI just to kind of get a sense of what people would say. I think most people have answered it is a trend, but I also think about from a financial product developer, marketer kind of standpoint, we in the industry might just glob onto the AI theme and push out a bunch of product. And, I don't know if that in itself is being used as a fad, even though the underlying AI technology is here to stay. And I know you do a lot of venture investing, so you might have a different view, or maybe your view is more in that side. And what's basically my question is, as an investment theme today, can you get adequate exposure in the public markets to AI?
I think you can get good exposure in our view, and we do, as you said, invest in the private markets. We invest in the public markets, so we kind of see both sides of it. I think to get full exposure, you do need to have some exposure in the early stages, later stage venture companies, these private companies where really, if you think about true AI leadership, pure play AI technology companies, a lot of them are still private. They haven't come public yet. And in the public markets, of course, you have the Mag 6 or Mag 7, depending on how mean you want to be to Tesla. I mean, those companies obviously are the ones who are, I think, capturing from a dollar value standpoint, the majority of that AI spend. And then there are certainly other companies that are public that are smaller than the Mag 7. Vertiv is a company that we actually own as an example, where they are an infrastructure provider and they focus on liquid cooling for data centers. So there's a handful of companies like that too. But I think I want exposure in both sides, public and private, to get the max effect.
Yeah, I guess that makes sense. I understand the infrastructure play in AI, the chip makers, the data centers, whatever. I don't quite get the revenue or the business model of, I guess, the models behind AI. When, something like a ChatGPT, you can get, partly for free, maybe not a real commercial use of it, but what is the revenue? What is the business model for the makers of the model, if you will, the large language model?
Business model for them, you can think of it a little bit like Apple with the App Store. It's not a perfect analogy, but essentially they're going to offer services to developers who want to build on top of the models that they create. So Google Gemini, OpenAI with GPT, Claude with Anthropic, and developers who create applications will pay for the API calls that they make back to those companies like Google. So if you create an application that is super popular and is generating a lot of use, hopefully you have your own monetization mechanism for that, because you're going to be paying Google or OpenAI a lot for the queries that you're essentially processing through them.
And the underlying cost, as I think about this from even just a ETF provider standpoint and dealing with index providers, and you got to pay for data, at least in our world. And do these AI companies have to pay for all the different data that feeds their model, and will that be a cost burden to their business model?
They're starting to. So, more recently, we've seen this deal between Reddit and Google. They had, I believe it was about a $60 million annual data licensing agreement between the two companies. And obviously, there's a little bit of tension between, for example, the New York Times and OpenAI in courts for perhaps not paying, or at least what New York Times thinks is not paying for using some of their data and their content. So I think we're going to see more of those deals with some of these big content providers to open up their data to these models. But I think that also points to another reality of this AI world, which is that there are a lot of internet companies that already have just a ton of data. I mean, I think about Google, I think about Meta. They probably have more data than anybody in the world. And I think that puts them in a great position when you think about building AI models, because can they go and license data from a Reddit? Certainly. Would they want that as part of their models? Maybe. But that gives them a little bit of a lead because they've got so much already to build those models with internally.
Yeah, that we've all given them for free.
Exactly. A lot of data for free.
I wonder if you could tell me a little bit about your background and the establishment of Deepwater, and then we can kind of get into how you are working with AI in your business.
So we started Deepwater in 2017. It was myself and two partners, Gene Munster and Andrew Murphy, and we had worked together for a long time on the sell side as analysts, covering technology companies, Apple, Google, Facebook, kind of all the big players that we're talking about very much now in the AI space. And when we started the company, we said we want to take these insights, this research that we do at a deep level in technology, and apply it to actual investments. And to start doing that, we launched a venture fund. That was our first product. And from then to today, now we have over 350 million in total AUM. We manage funds across the venture to public spectrum. So we've launched other products in the venture space. We've launched public products. And we see ourselves as, growth, kind of persistent growth investors across the spectrum, from the earliest stages of company formation, the most exciting new technologies, all the way up to public companies that are monetizing a lot of those technologies. And ultimately, I think we'll benefit from those emerging technologies we see at the early stages.
And where does artificial intelligence come into play for you? And what does it mean for your business? Is it a way of doing more of what humans can do? Or is it a way, when applied to investing, being more predictive about what to invest in?
It means a lot to us. And I'll go back to that founding moment of Deepwater in 2017. One of the core themes that we were excited about way back then, it feels like forever ago, but before we really had, obviously, the ChatGPT revolution, it was just the beginning of kind of people getting excited about deep learning. And so AI was one of the foundational theses that we came out with. It was one of the things we wanted exposure to in our first fund. And now it's something we continue to want exposure to. And over time, since we started the firm, there's always been just a curiosity internally at Deepwater about these technologies. We like to use them. We think you can get better insights actually using and experiencing technologies versus just sort of doing the research on them. And as part of that curiosity, last year, I started using AI to build investment portfolios. And we always get this question, right? Like, is AI going to take our jobs? Well, our job is to pick stocks in some sense. So let's see if AI might beat us. And we were really impressed with how good AI did at the stock picking tasks that we gave it. So now we're 9-10 months into kind of experimenting with that. We've built this program that I call Intelligent Alpha, and it uses generative AI to build intelligent investment portfolios. There's about 40 total strategies that I track. 80% of those, as of last count, were beating the benchmarks that I set them against. And on average, they're winning by about 400 basis points. So AI has proven to be a pretty good stock picker, and I am worried about my job.
Well, maybe you can just kind of give me a sense of process and developing something like that. Is it a single statement, like come up with a portfolio that beats the S&P by at least 4% or something like that? Or, is it layered? Does it have different aspects to it that it has to build upon?
Yeah, I've tried probably thousands and thousands of different attempts and ways to try to find a process to get good outputs from the AIs. And what I've landed on is you can kind of think about it in 3 buckets, a sort of Venn diagram of overlapping philosophies. So starting with kind of like an index philosophy, what you want to start with is, what is the exposure that you want to create? Do you want a large cap portfolio? Do you want a small cap portfolio? If you just say, pick 10 stocks for me, ChatGPT will do it, Gemini will do it, and they're probably going to pick you 10 of the biggest large cap stocks that you can think of. It's going to give you Google, it's going to give you Apple. And I've done this a handful of times. They might pull a few things randomly, like Square or something like that, but you're basically going to get the Mag 7. So that's not super useful. We all own a ton of the Mag 7 if we just own the SPY. But if you create how you want it to think about the world, what part of the world, what sector even, you can do tech, you could do different themes. I find that's a really good place to start. Then there's sort of this quant overlay, pulling in quantitative finance. There are different factors that you might want to pair with whatever top line exposure you want. So if you want large cap US equities, you might want to tilt toward quality. You might want to tilt toward value or growth. So I find putting some bias toward one of the factors in is useful, depending again on what kind of portfolio you want to create. And then the last piece is the active human manager piece, right? You want to give the AI discretion. You need to come up with creative ways to make it think for itself too, just like a human manager. So you put those ingredients together And that's where I found that you can start to get pretty useful investment portfolios, and it doesn't just spit out, 10 large cap, mega cap tech stocks.
What kind of frequency is this done on, like a weekly basis, monthly basis, and it helps you rebalance the portfolio? Or is it something that's just monitored on a daily basis? Or is it different for every portfolio?
Yeah, it's different for every portfolio. And again, it goes back to kind of what game do you want the AI to play? I have ones that review everywhere from kind of weekly or every 3 days or so, which is more like an absolute return strategy that I've been testing, all the way up to portfolios that only review every quarter or even twice a year. So depending on how you want that portfolio to look, if you want to, compete against the S&P 500, for example, you might not want to do a ton of rebalancing. The S&P rebalances quarterly. It might make sense to just follow that. If you are doing something that is a little more aggressive, you might be running a long short strategy, which is one that we're also testing. That you might want to look at weekly, monthly, every few days, depending again on how you think the AI is best suited to beat its benchmark.
So you talked about overlaying kind of a quantitative filter on some of these things. That makes total sense. Pick quality stocks or whatever it is whatever factor that you want to look at. I mean, is AI just a souped up version of like a big data problem? Basically, human analysts can kind of do that with a database of numbers, right? Or scraping the SEC website for company financials and look at a backward looking factor and then pick stocks by that. Or are we at a point where AI technology can say, all right, these are the stocks that were with these historical factors, but based on other factors, economic, climate, whatever that are else out there, the AI could then predict what stocks might have the best probability of success?
I think what's different with the generative AI tools is with, quantitative finance, you're really just focused on numbers and big data. And generative AI, you can pull in qualitative aspects, which I think if you think about the last decade, 20 years, I think what separated quants from human analysts is numbers versus what you're talking about, right? Predicting the future, looking at Apple in 2007 and saying, okay, the iPhone is going to be way bigger than any quantitative model might possibly predict. And we think so because of all these qualitative realities of how great the product is, human demand, things like that. I think that is really what distinguishes generative AI, because you can kind of do some of both, finally. You can pull in the quantitative analysis. I think that stuff is well trafficked now. And you can augment it, in my view, with this qualitative overlay of understanding high quality companies, lower quality companies too, if you're trying to avoid certain exposures in your portfolio. And I think the combination of the two is really what creates the magic. And what excites me the most, Ed, about Gen AI is you think about the world today versus 5 years from now, 10 years from now, these models are just getting better and better. I mean, I use them every day. I see it on a weekly basis. In some cases, the kinds of responses, the kinds of outputs that the models can do. That's what really excites me, is the future, where we're headed and how much more capable they'll be.
Is there a way to audit the decision making of the AI, or do an attribution and the AI tells you we picked these stocks because of these factors, or something of that sort?
You can, and it's been pretty fun. I mean, one of my favorite examples is one of the strategies I run is a long short strategy. It's inspired by the old Julian Robertson, long the best, short the worst companies. And so it's 30 stocks long, 30 stocks short. One of the shorts that AI had picked early this year was Boeing, which has been just an incredibly prescient short. I asked about it. I said, why did you pick Boeing as a short? The response it gave me, this was before the most recent 737 MAX issues. It referenced the prior 737 MAX issues and basically said, we may not be through the woods yet. There may be further issues given these prior issues with that plane. And lo and behold, that's what happened. Now, that's probably just luck. It's not like the AI knew anything. But the fact that it picked up on, hey, there was a problem at this company before with a specific thing. And if you look at historical patterns, a lot of times when a company has a problem with a product, it isn't just one-off. I mean, to be fair to the AI and not take away too much credit, it's making a good point that, look, there could be more issues here. I remember back with Peloton when they started to have recall issues, everyone who liked Peloton, and this was in, I think, 2021, you kind of wanted to believe, okay, this was it. but then there were more recall issues. And so that tends to be the pattern for this thing. And AI picked up on that, I think, really well in a way that a human may have overanalyzed and just thought too much about it. It kept it simple and it was right.
Well, when you talk about AI, you're actually talking about 3 different models that you're playing with or that you're using. You have your, your artificial intelligence investment committee, your AI investment committee. Is that right?
Yes.
Can you talk about that?
That's what I call it. Yeah, we use 3, and it's set up, like a human committee would be. It's 3 equal votes essentially. So I use GPT, I use Gemini, and I use Claude as the committee. I've also tested several of the open source models too, and I'm starting to try to create a competition and see, the AI models that tend to be the best stock pickers, I think should be the ones in the committee, not just, the big 3 closed source models, which is what it is currently. So I've been testing Llama, for example, Mistral, their model. I've tested Grok, which is a really fun model, but that's the committee. There's 3 members and they each pick their own portfolios for whatever structure or construction I'm trying to figure out. And then we merge together those 3 portfolios into a single portfolio. And that's what the ultimate output is for the strategy.
Can you generalize the differences between those? Like what kind of generally GPT tends to think this way or Claude tends to think this way? Is there anything you can discern from working with them?
You can. And it's funny, I heard Mark Zuckerberg talking a little bit about this on another podcast a week ago, I think, at the time we're recording. He was talking, it was just about the recent Llama 3 launch. So this was mid-April. And one of the things he was talking about was these models do tend to have a little bit of a personality. And I've noticed that too. The more you play with them, you kind of see these different nuances as an investor for sure. That's how I'm using them. And if I had to characterize the 3 that I'm using, it would be in this way. Gemini has a bent toward liking technology stocks. So Gemini from Google is a little more of a tech growth investor. Claude to me is the most contrarian. That one often comes up with picks, particularly on its conviction picks, where you're like, wow, I wouldn't have thought that was going to be your top pick. So I find that one to be very interesting for that use. And then GPT, I actually think GPT understands the active investing probably better than these other 2 models, but it also tends to give you like the more down the line picks. Yes, I will be an investor for you, and this is what you should do. It's like you're a super conservative financial analyst or financial advisor. And what's fun too about that is those personalities do and have changed a little bit and morphed over time. I have seen since I started using, I think ChatGPT has gotten a little bit more creative and Claude has also stayed creative. So I suspect that these personalities will continue to change. And I actually think as humans using these tools, whether it's for investment purposes or otherwise, understanding how they act and what their personality is and how it changes is also going to be, I think, a huge value add for the human AI user.
Yeah. I mean, presumably they're changing, they're evolving based on results and new data points in their databases, right?
Yeah, every time they get updated and retrained, I mean, it recreates, I think, the personality in a way. So I suspect we'll have, some kind of like baseline personalities for a lot of them, but I do think that they will, just like humans, in a funny way, evolve over time as they continue to learn.
Can you talk a little bit about infinite versus superintelligence in AI?
Yeah, I think prevailing thought in the world 5-10 years ago was this idea of superintelligence. There was a philosopher at Oxford, Nick Bostrom. He wrote a book called Superintelligence. And he basically goes through this progression of how we kind of evolve in AI, where once we hit artificial general intelligence, so theoretically the ability for an AI to be kind of as smart and sentient as a human being, in his view, we would then very rapidly go to this place of artificial superintelligence. So a machine that is orders and orders and orders of magnitude smarter than any human being ever on the planet Earth. I think that now that we've kind of seen what these tools do and how they work, I've had this evolving thought talking with many of the startups in our portfolio on the venture side that I don't even know that, number one, superintelligence is desirable, because that is where I think people get scared. You hear this, reality of a machine that might be smarter than any human being. How do you compete with that in any way? Beyond its desirability, I don't know if we need to get there to get the benefits of superintelligence. I think the thinking is if we get to superintelligence, then it can cure cancer for us. It can cure aging. It can cure energy issues, right? It can cure every problem in the world at the snap of a finger. But instead of that, I've had this thesis evolve around what I call infinite intelligence, which is instead of having a single entity that is smarter than any human ever, what if you just had almost an infinite number of general human intelligences, or an infinite number of, let's say, physics graduates that could work on a physics problem and figure it out? Because that's what you can do if you have the economic resources, of course. It costs energy, right? You need to have the compute to be able to do it. But theoretically, that seems like a more desirable world to me, where you don't have something that's more intelligent than humans, but you do have something that you can bring a lot of brain power to a single problem to solve these really complex problems. And that feels like we're maybe closer, certainly, to getting there than to superintelligence.
Yeah. I'm really looking forward to the future in healthcare and, things of that sort, and medical technology and biotech and all of the stuff that can be applied. But across the board, I think.
I think those are some very exciting spaces for AI, and just how can it really shape our lives? People ask, like, how is AI going to change my life? I think what you just said, Ed, healthcare is one that a lot of us will feel. Hopefully we live longer, feel better. What's better than that? That's the best.
Speaking of living longer, are we going to live longer without jobs because AI took them? What's your take on that?
I think it's a mix. I think there's certainly like the scare factor of, look how capable AI could be. It's going to come for all of our jobs. I think the reality is this. We did a study on this actually back toward the founding of Deepwater, when we were just sort of cutting the surface of AI. And our analysis was something like 40 or 50% of jobs felt like they were at risk to AI. And those were jobs like, truck driver, server, things like that. And I think that makes sense. I think we're starting to see some of that actually play out. I still think that will ultimately happen. I think there's a lot of jobs that are going to be really hard for robots to replicate in any near-term time frame. And we've always said, like, the trades, for example. And I worked as an electrician as a kid. Pulling wires in an attic, every attic's different. Every crawl space is different. Those things are probably going to take a really long time, even though things like Optimus with Tesla are really cool. Those robots aren't anywhere near ready to do that kind of work. The other kind of work that I think that humans will always continue to do to some degree is things related to community and empathy, because those are things that I think robots can't really replicate. You can't replicate the trust between two people. You can't replicate the communal feeling of, whether that's going to church together or going to a concert together. Even if that concert is a robot playing music, the crowd needs to have that energy too, right? And a lot of the great thing about going to a concert is the other people around you. And so those are the things I think we're going to see humans optimize around, is these tasks that are really hard for robots to do in the case of the trades, or these things that are very like empathetic, where there's value add actually to just having a human touch.
So a little bit of, might ask you for a little bit of professional advice. As an ETF provider, developer of products, we get pitched a lot of different ideas. Obviously, as you can imagine, a lot of AI ideas that kind of come across. What questions would you ask?
I would start by categorizing the world in two ways. And this is how we've thought about it. There's investing in AI and investing with AI. I think investing in AI, there's a ton of products out there already. There's half a dozen ETFs that we could all probably name off the top of our heads that are focused on AI and innovation. Investing with AI to me is a different question. And it's been hard because, there have been products in the market, I don't want to speak badly of any of them, that are AI powered. And if you comp them against the S&P 500, in many cases, they haven't performed yet. And those have been sort of this generative AI era. And I believe that the reason that we've seen some of these AI products come out prior to generative AI and not perform well is because they're asked to do too much. And that's where I would start in your shoes is, okay, what are we asking the AI to do? Number one, how complex is this game that we're giving it to play? If you're going to say, I'm going to give you social sentiment signals every, second of the day, and I'm going to give you a news feed from, every major news source, and I want you to go and trade stocks, that's a really, really hard game to play. I mean, Renaissance Technologies can play that game maybe, or something like it and do really well. But if you just put that and pipe that through a generative AI tool, maybe you get okay results. If you create a game that I think is winnable by the AI, so it doesn't require persistent and constant decision making, that's where I would start. Start with the game, make sure that you can find a game that the AI can play really well, and then look at, okay, how have the results been? Prove to me that the game you've created for this AI and the process that you're using can generate these persistent results. And I think, like I said, with Intelligent Alpha, we are starting to see those results. I think it's very much possible, but it starts with playing that right game, giving it the right data, giving it the right philosophy as an investor, and then just being patient with it.
So a little more focused, at least initially.
I think so. Yeah. Focused. And again, to me, it's eliminating actually some of the issues that human investors have. That would be the other piece in my mind. Don't try to make it do too much. Like I said, if you try to make it a trader, most human traders don't do very well. And a lot of machine traders don't do too well. Make it an investor. Make it think like an investor. Make it think a little more like an index, a little bit like a quant, a little bit like a human. I think that is the key to winning in using AI to invest.
Tell me about your podcast. How long have you been doing that?
We have done a few different podcast products. But what I like to do on my blog, the deload.com, I kind of write just about the world and investing, kind of the intersection, I would say, of finance, experimentation with AI and philosophy. And as part of that, I do bring on some guests and have conversations. Most of them are people from the startup world. So early stage companies, in many cases, people who are working in the AI space. And what we're trying to do is just have conversations about where we see the world going and trying to be early to some of these new trends. I have this philosophy of my own that everybody in the world should try to become a foremost expert at something. And the only way to become an expert at something is as a function of time. And the only way to hack the time function is actually to try to find something new that there's not a whole lot of people who are already experts in. And so by exploring, okay, where is the world going? It gives you some of those kernels, some of those potential opportunities to become a quick expert. And I think that we're seeing that in AI. It's a wide open space. And if you're looking for something to become an expert in, find a niche in AI, whether that's investing with AI like Intelligent Alpha or something else. It's a great time to become an expert, I think, in that niche field.
Oh, cool. So there's still opportunities for me to figure something out.
I think it's wide open. It's wide open, Ed.
All right. What's one long-term trend you see playing out over the next year or several years? It could be about AI or, given your seat as a venture investor, just kind of anything broadly that you see that you think is kind of cool.
I mean, I'm super biased in this answer, but I think if we look at the world of asset management, the last 20 years has been defined by the shift from active to passive. And I think if we look forward to the next 20 years, I think the next shift is from both passive and active to AI powered. I really do believe that AI is now capable. It's in a place to deliver on investment portfolios for clients that can beat benchmarks. It's not going to, again, do the Renaissance Technologies and be up 80% every year, even when the market's down. But if you're looking for some persistent alpha, I do think that AI is going to be a very effective tool to get there. And, we're really excited about Intelligent Alpha. It's something that we are going to be bringing to market later this year. And I'm really excited to hopefully help spark a little bit of that shift to this AI-powered world.
Yeah, that's interesting. I was catching, I think, one of your recent episodes on the Deload podcast, and I think you guys were talking a little bit about that too. And I was just thinking, all right, so you have active, you have passive, and then you have something kind of in between where AI sits. And I thought that was a pretty interesting concept to think about.
I think that's exactly what it is. It's AI is revolutionary in its application. I mean, it will change everything. I don't think that that's hyperbole, even though a lot of people probably are saying that and believing it. But I also think there's a useful construct where you can also think about that revolution in terms of evolution. And in the asset management world, I think that evolution is going from something that's, okay, are you active or are you passive, to something that has a little bit of the best of both worlds, in my opinion. You get that structure, you get that consistency of indexes. That's what I think people love about passive investing. And you do get that creativity, that potential for alpha that comes from active that you just can't get definitionally from indexing. If you can combine those two intelligently with a machine that's not emotional, I think that that's a win for investors.
Yeah, absolutely. Yeah, I wonder if I can get your take, what we call trend or fad, and a few different concepts. Sometimes they're fun, sometimes they're dumb, but they're just meant to kind of pick your brain a little bit, and maybe related to our topic. Nuclear energy, trend or fad?
Trend. I think it's inevitable, unavoidable. If we want a more sustainable future, I think we have to have nuclear as part of that.
NVIDIA, trend or fad?
That's a tough one. I think it's a trend, though. I think, like we said, we're in innings 3 or 4 of this AI bull run. NVIDIA has moved a ton, the stock. I think most of that, though, has been supported by fundamentals. And, we look at what some of these big hyperscalers are still saying about the investment they need to make in AI. I don't think the investment phase is over yet. So I will say NVIDIA is still a trend.
EVs, electric vehicles, trend or fad?
I think it is a fad in the short term, but a trend in the long run. And how I rectify that is, I think that a year ago, everybody probably got too excited and they thought that this transition to EVs would happen way faster than is realistic. When you look at most technological adoption cycles, particularly when it comes on the hardware side, it takes time for these things to take over. I mean, EVs, to get to 50% plus in terms of new vehicle market share, I mean, we're still, in my opinion, at least a decade away from that. So kind of definitionally, we're still going to trend in that direction. I think EVs are a better solution, but I also think we're probably going to have these ebbs and flows where, and it might be somewhat related to gas prices. When gas prices are low, you may see some lag in demand, some crash in demand where consumers say, hey, gas is fine, it's good enough. And when gas prices are higher, maybe we get more of an urgency to get there. But I think we're still, a decade out. So it's a long-term trend, but probably a short-term fad.
What's the best way for people to learn more about you and what you're doing and your company?
They can find more about Deepwater at Deepwater Management, mgmt.com, or I'm active on Twitter at Doug Clinton, easy to find there. And then the last place, and this is where you can read a lot of the experimentation I'm doing with these AI-powered strategies, is my blog, The Deload, which is DELOAD.com.
Fantastic. Well, Doug, thank you very much for your time. I really appreciate the conversation.
Thanks, Ed.
And thank you for tuning in to another episode of Trends with Benefits.